Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hello everyone, hope you're having a good holiday weekend. We're going to be looking at all the commodities as one here, and we're going to start off with the dollar, as that is the most important indicator, or I should say the most important factor in my opinion, as we are looking at significant inverse correlations between most notably gold, oil versus the dollar over the past month or so. It's really stood out to me. So I've been using the dollar for the basis of my analysis, and then I compare it with the others and go from there. So here on the dollar, we did drop down to a lower low. And when we hit that lower low, if we zoom back and say, when's the last time this price was down in the mid $88 range, we have to go all the way back. And that's a significant pullback, a significant amount of time back here to 2014, essentially. So almost a little over 3 years, we have not seen this price this low. It's a very clear downtrend right now, looking at the weekly chart. So the weekly chart technically confirmed the bear flag because we did see a weak bounce and then we continued down with a lower low, but that lower low only dropped down and broke it by less than 20 cents, 19 cents. So that is something worth watching. If the bulls can see a strong rally off of this point, which it's a decent bounce so far, that is a close enough bounce that we could be looking at the bulls to shift this bounce and continue following through a little bit more. It's going to be very important all about 90.57. Anything under 90.57 is just a lower high compared to the high of the last bounce. And because we did break to a lower low, it will be harder for the bulls to break that resistance level. But that's what I'm watching. If we see another lower high and a lower low, we know the bears remain in full control, which would, if you are bullish gold or oil, that's exactly what you want to see. But if we do see a bull break to higher highs, that is a bearish indication for oil and gold. So checking in on gold, here's the start of the pullback, which is, again, completely inverse to the bounce in the dollar. And we were unable to break the high of this breakout so far, which is up at 1366 if we're rounding. And we got all the way up to 1361.61. So it is a lower high here, but because of the magnitude of the bounce, we will look for a higher low to form on the daily time frame, and then for the bulls to give that resistance level another chance. And that's anticipating that we see a bit of an ascending triangle pattern, as the dollar could be looking at a bit of a descending triangle pattern where we have the bounce and we touch the same support and then a bounce and a lower high and then we head back down. So that's something I'm going to be keeping an eye on as well. But where it stands right now, the gold bulls are pretty comfortable looking for that healthy consolidation, again, because we broke the lower high pattern on this breakout, and we will be looking for that healthy consolidation to form, all dependent on the strength of the dollar bounce. Oil is due for a pullback as well. Oil has been on fire ever since the inventory report. It was a beautiful bottom fishing play with support of 58.11, and we were hovering just above that 58.11 support when the inventory numbers came out, and then it's 4 days in a row of green. So significant follow through for the bulls, but we're a bit extended. 4 days in a row after the all-out dump. We're not going to do anything to change this trend straight from the low. It's going to require a higher low and a higher high to shift this momentum back to the bulls to be looking to the mid $60 range. So we will be looking at the potential for some consolidation, the 4-hour time frame. If we lose the higher low pattern, that's when we know that some 4-hour consolidation is going to be coming. So we got our higher low pattern here. The bulls are trying to establish another one, but the most recent one was all the way down at 60.86. So anything above 60.86 will be a higher low on the 4-hour time frame, keeping these bulls in control. It will require a lower high and a lower low on the 4-hour time frame in order for this daily chart to start pulling back with any kind of meaningful consolidation. Natural gas, switching over to NGJ, the futures contract, and here we have our low of this pullback down at 256.5, and the bulls are trying to form a higher low compared to 248.7, and we have to see a break of the high of the bounce at this point, 2661. So the range right now is 2565 and 2661. We'll see which breaks first. We're pretty much right in the middle of that range. And looking at the weekly chart, I would expect the bulls to show up when we have a pattern like this with a big time bounce and then a big time dump, but still a higher low, looking for an equilibrium pattern to play out and for a bounce probably into the upper 270s I would be looking for. So need a little bit more follow through for these bulls. This 4-hour time frame, you can see it's just sideways trading. But if we get this bull break of 2661, we can be looking for some continuation for the bulls. Of course, the inventory reports on oil and natural gas can affect anything midweek, Wednesday and Thursday. But heading into those days, Well, actually, we do have the holiday this day, so they're both going to be on Thursday. So we have a couple days of trading, and we'll see if the bulls are able to get some follow-through on natural gas to give some opportunity for short-term profit before risking holding during that inventory report. So that's where we stand. Again, all about the dollar. Can the bulls continue this bounce, which is certainly underway? 4-hour oversold bounce is underway. And if it does continue, we're going to be looking for gold to continue consolidating, and we're going to be looking for oil to lose the 4-hour higher low and higher high pattern. And gold is the stronger inverse correlation to the dollar right now. Oil, it's definitely there. I've been watching it, but it's less of a correlation than gold has to the dollar. So that's where we stand. I appreciate you watching. We'll continue to watch the market strength as well. Very notable that gold did not see an influx in volume and activity when the market was dumping, and that influx came with some data, some pre-market data that was reacted to, and that really got the bulls going. So interesting to note what the motivation and what the factor, or what I should say, what the catalyst is behind gold movement. But in my opinion, it's really the dollar is so much more important than even the market at this point. So thanks again. We'll see you soon.